Welcome back to Stocks and Trades channel. We provide easy to digest information and short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. Volatility made a comeback last week, triggered by concerns around the new Omicron COVID-19 variant, which the World Health Organization labeled as a variant of concern. Because of the uncertainty, stocks have oscillated between gains and losses, with the S&P 500 moving more than 1% in both directions in each of the last 5 trading days. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that may be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Our first stock type is dividend-earning stocks. These are a great way to earn passive income. This week's suggestion is FedEx Corporation, with ticker symbol FDX. FedEx Corporation is an American multinational conglomerate holding company, which focuses on transportation, e-commerce, and business services, and is headquartered in Memphis, Tennessee. The name FedEx is a syllabic abbreviation of the name of the company's original air division, Federal Express, which was used from 1973 until 2000. FedEx today is best known for its air delivery service, FedEx Express, which was one of the first major shipping companies to offer overnight delivery as a flagship service. Since then, FedEx also started FedEx Ground, FedEx Office, FedEx Supply Chain, FedEx Freight, and various other services across multiple subsidiaries. FedEx is also one of the top contractors of the U.S. government, and assists in the transport of some United States Postal Service packages through its service, FedEx Smart Post. In its fiscal 2020, FedEx derived 51% of revenue from its Express division, 33% from Ground, and 10% from Freight, its asset-based less-than-truckload shipping segment. The remainder comes from other services, including FedEx Office, which provides document production or shipping, and FedEx Logistics, which provides global forwarding. FedEx acquired Dutch parcel delivery firm TNT Express in 2016. TNT was previously the fourth-largest global parcel delivery provider. Frederick Wallace Smith is the FedEx's founder, chairman and chief executive officer. Some technical analysis data shows that FedEx's return on equity is 23.24%. Its asset growth is 5.67%, its average volume is more than 2.71 million, its market cap is almost $64 billion, its beta is 1.28, its PE ratio is 12.5, and its EPS is 18.84. Our rating is 10, and we consider this stock as a strong buy. FedEx issued its quarterly earnings results on September 20th. The shipping service provider reported $4.37 earnings per share for the quarter, missing analysts' consensus estimates of $4.92 by 55 cents. The shipping service provider earned $22 billion during the quarter. FedEx's quarterly revenue was up 13.9% compared to the same quarter last year. Based on experienced analysts offering 12-month price targets for FedEx in the last 3 months, the average price target is $305.60, with a high estimate of $369, and a low estimate of $250. With current price at $240.84, this would mean about 27% average profit over the next year. Having a dividend yield of 1.27%, the ex-dividend date is on Friday 10th December, and the dividend pay date is the 27th of December. The annual dividend is $3, so buying a FedEx stock now will pay you 75 cents in late December. Despite FedEx doesn't yet have a strong track record of dividend growth, the dividend payout ratio is 15.94%. This payout ratio is at a healthy, sustainable level, below 75%. Based on earnings estimates, FedEx will have a dividend payout ratio of 13.29% next year. This indicates that FedEx will be able to sustain or increase its dividend. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above-average earnings, and has the potential to grow faster than the overall economy. This week's suggestion is Amazon, with ticker symbol AMZN. Amazon is a leading online retailer and one of the highest-grossing e-commerce aggregators, with $386 billion in net sales, and approximately $482 billion in estimated physical or digital online gross merchandise volume in 2020. It operates through three business segments: North America, International, and Amazon Web Services. The North America and International segments include retail sales of consumer products and subscriptions, like Amazon Prime membership fees. AWS generates revenue from the global sales of compute, storage, database, and other service offerings. Retail-related revenue represented approximately 83% of total, followed by Amazon Web Services offerings with 12%, and advertising services and co-branded credit cards with 6%. International segments constituted 27% of Amazon's non-AWS sales in 2020, led by Germany, the United Kingdom, and Japan. Founded by Jeff Bezos in July 1994, the company is headquartered in Seattle, Washington. Andy Jassy has been the president and chief executive officer since July 2021. Some technical analysis data shows that Amazon's return on equity is 25.83%. Its asset growth is 35.52%, its average volume is more than 3.2 million, its market cap is $1.72 trillion, its beta is 1.13, its PE ratio is 67.2, and its EPS is 51.14. Our rating is 8, and we consider this stock as a strong buy. Based on experienced analysts offering 12-month price targets for Amazon in the last 3 months, the average price target is $4,117, with a high estimate of $4,700, and a low estimate of $3,800. With current price at $3,389.79, this would mean a 21.5% average profit over the next year. Amazon announced its quarterly earnings data on 27 October. Amazon's revenue for the quarter was up 15.3% on a year-over-year basis. All in all, Amazon stock remains an excellent equity for long-term investors, despite short-term issues that dominate daily headlines. Amazon also has a tremendous ecosystem, which they appear committed to keeping together. Our third stock type is blue-chip stocks. These are typically large, well-established, and financially sound companies that have operated for many years, and that have dependable earnings, often paying dividends to investors. This week's suggestion is the Coca-Cola Company, with ticker symbol KO. Coca-Cola is the largest non-alcoholic beverage entity in the world, owning and marketing some of the leading carbonated beverage brands, such as Coke, Fanta, and Sprite, as well as non-sparkling brands, such as Minute Maid, Georgia Coffee, and Costa. Operationally, the firm focuses its manufacturing efforts early in the supply chain, making the concentrate for its drinks that are then processed and distributed by its network of more than 100 bottlers. Concentrate operations represent roughly 85% of the company's unit case volume. The company was founded by Asa Griggs Candler in 1892, and is headquartered in Atlanta, Georgia. James Quincy has been the chief executive officer since December 2016 and chairman since April 2019. Some technical analysis data shows that Coca-Cola's return on equity is 43.22%, its asset growth is -6.77%, its average volume is about 13.75 million. Its market cap is more than $231 billion, its beta is 0.68, its PE ratio is 25.8, and its EPS is 2.03. Our rating is 10, and we consider this stock as a moderate buy. Based on experienced analysts offering 12-month price targets for Coca-Cola in the last 3 months, the average price target is $61.50, with a high estimate of $65, and a low estimate of $55. With current price at $53.54, this implies an almost 15% upside potential over the next year. The Coca-Cola Company issued its quarterly earnings data on 26 October. The company reported 65 cents earnings per share for the quarter, topping the Thomson Reuters consensus estimate of 58 cents by 7 cents. The firm had revenue of $10.04 billion for the quarter, compared to analysts' expectations of $9.72 billion. Coca-Cola had a trailing 12-month return on equity of 44.22% and a net margin of 23.31%. The business's revenue was up 16.1% compared to the same quarter last year. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully consider opening a position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. MongoDB will release earnings on Monday 6th December. SentinelOne will release earnings on Tuesday 7th December. Udemy and UiPath will release earnings on Wednesday 8th December. Finally, Costco, Chewy, and Oracle will release earnings on Thursday 9th December. Watch these stocks' prices carefully and think twice before making any decision. Next week will not be that popular among dividend stocks, but we have some interesting options to suggest. Monday 6th December is the ex-dividend date for 34 stocks, including BlackRock. Tuesday 7th December is the ex-dividend date for 20 stocks, including Hewlett-Packard, Electronic Arts, and Guess. Wednesday 8th December is the ex-dividend date for 27 stocks, including Franco-Nevada Corporation, and Canadian National Railway. Thursday 9th December is the ex-dividend date for 73 stocks, including Automatic Data Processing, VF Corporation, Hewlett-Packard Enterprise, Walmart, and MGM Resorts International. Finally, Friday 10th December is the ex-dividend date for only 17 stocks, including FedEx Corporation, and Fidelity National Information Services among others. Be sure to buy any of the above stocks before the market closing of the ex-dividend's date previous day to benefit from the dividend payment. A few initial public offerings have been arranged for next week. New Holdings Limited, with ticker symbol NEW, will be listed in New York Stock Exchange. There are 289.2 million shares offered at a price between $8 and $9. NEW is one of the world's largest digital banking platforms based on number of customers, and one of the leading technology companies in the world, with 48.1 million customers across Brazil, Mexico, and Colombia. Its customers include about 28% of the population of Brazil aged 15 and above. NEW Bank is perhaps best known for its credit cards. HashiCorp Incorporated, with ticker symbol HCP, will be listed in Nasdaq Global Select. There are 15.3 million shares offered at a price between $68 and $72. HashiCorp is a software company with a freemium business model based in San Francisco, California. HashiCorp provides open-source tools and commercial products that enable developers, operators, and security professionals to provision, secure, run, and connect cloud computing infrastructure. It was founded in 2012. Chicago Atlantic Real Estate Finance Incorporated, with ticker symbol REFI, will be listed in Nasdaq Global. There are 6.3 million shares offered at a price between $16 and $18. Chicago Atlantic is a Chicago-based real estate investment manager, focused on investment strategies that garner outsized returns based on economic trends. They approach each investment by combining a disciplined balance of data analysis and local expertise. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.